welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Markets are off the day's high, but holding on to the gains. The Nifty trades around the 10,300 mark. Commercial vehicle manufacturers made merry in November, with sales rising more than 50% last month, and two-wheeler sales also register healthy growth of more than 20%. The Indian government has moved the Supreme Court, seeking to hold the Vodafone tax arbitration. And paper stocks are seeing strong gains in trade after reports of capacities being shut down in China.
Well, thanks for that, Navneet. So those are the top headlines. The other headline, though, would be that the market continues to rise and shine in an otherwise very good global scenario as well. If you look at what European markets are doing or what the Dow futures are doing as well, the scene is good. So we have a good day on hands and our markets are obeying that. Look at that. That's what Europe is doing, off the highs of the day, but still in the green. The Dow futures too were trading in the green the last time I saw, and our markets trading fairly well, off the highs of the day, but doing reasonably okay. I think the market breadth would be crucial. Just pull up the advanced decline ratio or the Nifty 50, and you'll see that while there's a bit of a convergence, we're still staying put. Let's hope this doesn't die down in the last half an hour, 1 hour of trade that is left. 1.5 hours of trade left, to be precise. Bring up the heat map just to give you a flavor of what really is happening. Yes, a bit of red coming in, but this is normal. In the morning when we started off, only 5 stocks in the red. Now there is a bit of red more, but I don't think this is really dramatically changing or altering the landscape today. A lot of green, not enough, not big losers nor big gainers. That's the order of the day today. And some stocks like ITC as well as HPCL and a couple of other oil marketing companies continuing their gain. But otherwise, it's an all-round performance that we're putting in. Autos are participating, IT is participating. So it's not a bad day for the large caps. But I must tell you, I think it's a terrific day for the mid caps. And Pradeep, I looked at the set of stocks. It's not just those unknown names which are moving up. Known names are moving up 5, 10, 15% today.
Yeah, so likes of Tata Communications to begin with, which is a fairly liquid stock. And if you look at the movement with significantly high volume, the stock is up around 4.5%, 5% at this point of time. You also have Aegis Logistics moving up on the back of strong numbers, up around 5 to 6%. But the star sector today is definitely paper companies. And look at the star paper. We have been talking about some of the more liquid names, but I have picked up 1 or 2 smaller names like Star Paper and Ruchira Paper. Star Paper has been locked at the circuit for most of the time. Ruchira is up around 13-14%. Unitech, second big day for Unitech after rising 20% on the previous session, is up around 14-15%, although company management is now approaching Supreme Court, but looks like traders are still enthused. Setco Automotive, a stock that moved up last week on the back of good numbers, is up today as well with good volumes. Ucal Fuel would be another smaller name which has done well today. There is a little bit of churning, though market breadth remains fairly strong. And if you pick up 15 to 20 key movers in mid-cap, the chances are that out of those 16 or 17 would be gainers. There are a few losers like Radico Khaitan, just come under pressure with good volume, so some profit booking after a steep run. And also Future Enterprises is another stock which is under pressure today, down around 4.5 to 5%. Navneet.
Okay, so it's been a positive start to the markets, but if you look at the trends that are emerging from the futures and options space, everything's looking just fine. There's been one cause of concern that we've been highlighting since the morning session, and that's India Volatility Index. Despite of the gap up opening that the Indian market saw, the VIX has been trading in the positive territory since morning, and it's been trading above the mark of 14, which is actually at elevated levels. And in the recent past, last 6 to 7 trading session, the high of VIX was around 15.3. So from there it's receded to 14.2, but it still remains on the higher side. Remember, there are 2 major events which are still lined up in the month of December. You've got the US Fed meeting, and the Gujarat election result will be coming out on the 18th of December. So ahead of that, probably India VIX is telling you that there could be a bit of volatility in the near term. Having said that, if you look at the options data, the base for the market has been shifting higher. So that's one good news, where we were seeing writing coming for the 10,000 put strike. In today's session, We've seen put writing for 10,100, 200 as well as the 300 strikes. All these three strikes have added somewhere between 5 to 8 lakh shares, whereas on the call side, the 10,400 strike has seen a bit of open interest. About closer to 9 lakh shares have been added there. So the options data is also suggesting that in the near term, you may not see big moves now coming in on Nifty. Probably some bit of consolidation could be seen around the mark of 10,300. Talking about Bank Nifty, it retreated from those levels of 20-day moving average. It didn't touch that, but it was trading very close to that 25,465. But from thereabouts, it's retreated almost 100 points from day's high. So watch out for that mark in terms of Bank Nifty on the upside. Two stock futures I want to highlight. One of them is Walk Hard. The stocks are up on very high volumes in the cash segment, but even on the future side, one has seen fresh long positions being built up as open interest is up nearly 19%. Do watch out for the delivery data for Walk Hard today. And you've got Arvind, that stock's been on the tear since the morning session, and look at that, 22% higher in terms of open interest addition, and the futures have been trading with a premium of almost 2 to 3 rupees. So do watch out for this counter in terms of the delivery data, because if you look at the volumes on the cash side, that too has been on the higher side.
Well, so good going all round. Let's talk about how the markets could do though over the short to medium term and then maybe over the long term as well. Vaibhav Sanghavi, co-CEO at Avendus Capital, joins us right now on the show today. Vaibhav, good having you, and thanks so much for joining us at Bloomberg Quint. This is Neeraj here. Good afternoon. What would you be doing?
Thank you for having me.
Of course, no, pleasure having you. What would you be doing in a scenario like this, Vaibhav? Because we are perched ahead of two crucial events, one global in nature which could have big ramifications, and one local in nature. And while the market seems to be discounting any kind of negative surprises, if a negative surprise does come about, it has the potential to derail this uptick by a significant margin.
Of course, I mean, if you see the current month is a perfect textbook example of how you manage risks actually. And given the light where, as you rightly mentioned, on the one side, you have elections, and two, the Fed event as well. So if you talk about elections, generally as a policy matter of our fund, we generally do not take any big exposure towards these risks. But in terms of Fed, we do expect that, once, the 25 basis points hike is baked in, it will be extremely important to understand the tone, tenor of what's going to happen in the next year. And what the street or the Wall Street expects is basically 3 Fed hikes in the next year. Having said that, if that happens, you will see US dollar strengthening, and which might have a little temporary, effect on the flows as well, on the emerging markets.
Okay. So in a scenario like this, okay, let's work with an assumption that there are no surprises. I mean, the Fed virtually can't give a surprise. The market is probably pricing in a rate hike already. And let's assume there are no negative surprises from the election front as well, on the election front too. What would your stance be then? Because valuations still remain a concern. Where is it that you would be finding pockets of outperformance for investors to come in the first place?
No, you're right again, in the sense that while the valuations are a bit of a stretch at this point in time, but what we also have to understand is basically even after the reforms, like a big bang reform like a GST, couple of quarters adjustment on the GST as well, we have fairly seen that the market digesting those kind of volatile movements in terms of the earnings till now. At the same time, we would also be looking at FY19 forecasts, which are north of about 20%. So given the context where yes, whatever has happened in terms of the weak earnings momentum, and in a period when we are looking the earning momentum to strengthen going forward from here, the valuation premium which are currently there would to a great extent be justified. So I would have some hopes that FY19 will see a good amount of earnings growth, which would justify the valuation premium, and I would certainly be invested in light of those. Having said that, in an extreme short term, as earlier mentioned about US Fed rate hike and a couple of other sentimental effects, you might see some amount of time correction before we move ahead from these levels.
Okay, and there is a flash on your screen. NHAI has declared Sadbhav Infra lowest bidder in contract, and it's going to be a 75 kilometers Rajasthan highway project that they have won. Actually, stock is up 3.5%. We'll track this, and we'll probably speak to our experts later in the show. But moving on with this discussion with Sanghavi, Vaibhav, like you mentioned, this is a textbook case for risk management, and since you have a long-short strategy that you follow, what kind of positioning do you have right now?
So a couple of things. I mean, we generally, if you are long short product and the objective is to generate absolute returns, then what we ideally do or generally do, ahead of any of the binary events is either reduce the exposure towards the market, or if we want to retain this exposure, we'll buy some amount of protection, in case there is an event which is undesired or unseen. So we think that both these two events are to an extent binary events, and precisely for that reason we would be going into the events with buying some amount of downside protection at this point in time.
Vaibhav, what sort of correction do you foresee in case if we're in for some surprises? Let's say if the US Fed, it's largely priced in that they will be increasing the rates, but what if the tone is hawkish? And in terms of the result, the election result from the state of Gujarat, which come out on 18th of December, it's largely again priced in that BJP would win, but what the market is keenly watching out is the margin of victory. If there are any sort of surprises on the negative side from both these crucial events, what sort of correction can one expect?
Okay, there are three scenarios, right? One, both the events do pose a negative surprise. Two, either of one event poses a negative surprise, and three, both are normal. In case of both the events, which if it provides a negative outcome, then we might see some more sizable correction, probably in the northwards of 5 to 8%. If there is only one event which has panned out, in terms of a negative surprise, and we think that the market downside to be restricted between 2 to 4%, which can be pretty short-term and temporary. Having said that, you also have to look that in last 15 days of December, generally you see a period where the FIs are pretty inactive because of their holiday season. So in a market where it is a bit illiquid, at the same time you have seen stronger inflows on the domestic market, I don't see if there is one negative event to be long lasting in terms of the negative impact on the market. Having said that, if both the events are positive, then we continue to be in range bound and look for a time correction till we see the earnings momentum catches up again in FY19.
Vaibhav, which would be the sectors where you have maximum long at this point of time?
Sure, we have been consistently very bullish on private banks, retail-focused private banks, to consumers, both consumer staples and discretionary. Three, metals and mining, based on what's happening globally, and pretty much that would be a trading bet rather than being that would be more so renting and not owning stuff. For anything which is rural-focused, is something which we are very keen on. And at the same time, in oil and gas, we would prefer oil upstream to a downstream. So these are the broader sectors which we are bullish on.
And which are the sectors that you are not so bullish on?
Yeah, so there have been some rounds of rotational movement into the frontline indices, which is actually making life a little difficult in terms of the short side. Having said that, on a fundamental basis, what we are not still keen on is basically at higher valuations in terms of PSU banks to again bottom-up stories where we are seeing some amount of change in the business model. In case of IT and pharma, still we are not absolutely convinced about those two sectors as well. So all in all, this is the basket we would be relatively short on.
Okay, Vaibhav, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective.
Thank you very much.
That's the view from Avendus. But I'll tell you, there are two pockets of growth today, at least as far as stock prices go. One of them is dairy and dairy-related companies. The other is paper. And almost every paper-related company is done well. We'll talk about paper in a bit. For now, let's talk about dairy. Kwality They have registered healthy gains in trade today, up almost 6% in the current trading session, 5% currently. What are the key factors? Let's ask the management about how business is shaping up as well. Joining us on the phone line is Nawal Sharma, President and Head of Business Transformation at Kwality. Mr. Sharma, thanks so much for taking the time out. What's really happening with business? Is it business as usual, or is the market now taking cognizance of the kind of long-term business potential that companies such as Kwality give out?
Yeah, I think both the factors. See, first of all, dairy has got a huge potential, and gradually people are recognizing this. So that is one point. And secondly, as an organization, see, our differentiator is, if I just take you a couple of years back, it's consistent delivery against what exactly we have been talking about. So in FY16, when we said our current top line mix is 70-30 and we want to reverse this by 2020 in favor of B2C, if you see how the things have moved. FY16, 70-30, EBITDA level of 6%. FY17, it moved to 60-40, EBITDA moved to 6.7%. Q1 moved to 6.9%. Q2 moved to 7.2%. So our mantra has been focus on consistent delivery on the ground. So that's one part. And we will continue to hammer this for the next 3 to 4 years' time, because our entire focus is basically how to transition ourselves from a B2B organization towards building a very strong consumer brand on the ground. So this is one part which is company specific. Secondly, from a dairy as an industry specific, all of us know only 26% is organized. And this industry is going at a rate of around 20% so far as the organized piece is concerned, and 25% plus when it comes to value-added segment, which means there is huge potential for maybe 10 very big companies to get into this space and all will flourish. So that's what people have started recognizing. So I think that's what is leading to all these increase in stock prices. But I would not like to comment on short-term increase. I would like to talk about long-term things, and this is what is happening on the ground.
Yeah,
people
so
have now.
We will talk about the long-term as well, Mr. Sharma. Just one more question. You mentioned about the breakup between B2B and B2C, as well as normal versus value-added. Can you give me the breakup there? What is your current B2B versus B2C? What do you plan to take it to? And value-added versus the run-on-the-mill business? Yeah.
See, so far as B2B and B2C is concerned, FY17 it was 60-40, right? And in H1 also it is 60-40. So that is one part. And so far as 2020 is concerned, 20% should come from value-added, 50% should come from fresh products, and balance 30% should come from B2B. So that's one part of the story. And so far as within B2C, value-added piece is concerned, so as we said, the core part of the strategy is we intend to roll out some 8 to 10 categories, out of which around 5 categories have just been rolled out just a couple of quarters back. And this is in the areas of UHT milk, UHT Tetra Pak, flavored milk, Tetra Pak Lassi and Tetra Pak Chas, just been rolled out. So in terms of the numbers, it is minimal at this point of time, but ultimately it will hit 20% by 2020. So that's the direction in which we are moving.
Mr. Sharma, just moving away from your business and talking about the dairy industry overall, since the stocks have been buzzing, just want to get a ground check. Has anything changed fundamentally with regard to procurement prices? I remember when we interacted last time, you said you were expecting some sort of softening to come about when it comes to procurement prices.
Yeah. See, as I mentioned last time, so already 5% correction has happened, and maybe some more correction is on the anvil. Maybe over the next few days' time it will happen. So whatever we had projected last time, a conversation that we had, it is happening exactly as per that. So this has happened. You're absolutely right.
You know what you mentioned, you are going B2C aggressively, and that would also mean more investments into distribution or promotion cost and so on and so forth. So the kind of margin expansion that you talked about, do you expect margins keep expanding over the next few quarters? If you could give us some guidance for the current year and maybe next year.
See, let's talk about the fundamentals, right? So to talk about costs will also go up proportionately. Now there can be multiple strategies of getting into B2C, and strategy that we selected for ourselves. First, you build a huge scale, which means a B2B base, and then you start building B2C. As per this strategy, what happens? What is the benefit for us? B2B is a shock absorber. For example, even if we, let's say, spend some 35 to 40 crore over the next 3 to 4 years' time, if you see as a percentage of the overall revenues, it is hardly anything. Vis-a-vis a scenario where, let's say, if we were a 1,000 crore organization and we start building on B2C. So that's what is giving us benefit. So that is one. Secondly, in terms of investment, So while there is a plan of around 520 crore worth of investment in capex, 437 crore has already been done, and rest 83 crore will be done over the next 12 to 15 months time, which means all the capex is already behind us. Now there will just be maintenance capex to the tune of 50 crore or so. So which means we are all sorted. Now all the next 2 to 3 years time, the entire focus is to leverage and convert this investment into hardcore numbers on the ground, which we have already demonstrated over the last couple of years time. So this investment that we talked about, which has already led to a capacity increase of around 9 lakh liters per day for value-added products at its full potential, will give us some 1,800 to 2,000 crore worth of value-added revenues at a very high margin. That's how we will hit ultimately EBITDA margin of 9 to 9.5%, which currently is hovering around 7.2% or so.
9 to 9.5% for next financial 2020.
By 2020.
2 years from now.
See, we refrain from talking about short-term guidances because we are an evolving organization, and depending on the response that we get for our products, we'll keep changing our strategy. But directionally, we are moving in the direction that we have set in front of ourselves for 2020. And proof of this is if you look back for 2 years and check our numbers. So it is exactly in sync with the strategy that we talk about.
Many thanks, Mr. Sharma, for taking time out for us.
Thank you so much.
So that's the management of Quality Dairy, and they are guiding 9 to 9.5% of margin by 2020 versus what they have currently. I think around 2 percentage points growth is what the company is guiding. 7.7% is what most analysts are expecting for the
problem with Quality, I remember when we were interviewing them last time, is their cash conversion cycle is almost 93 days. If you compare it to Prabhat, it's 37, Heritage is 11 days. So even when you compare them to its peers, the cash conversion cycle is so high, and that's why it is weighing on their working capital and even on the margins front. But since we are talking about the entire dairy space from one stock to the other, Prabhat Dairy is the another stock which is on a tear. The stock has gained nearly 30% in the last 4 trading sessions. And Neeraj has an analysis on what the Bloomberg terminal is throwing about. Neeraj?
Hey, thanks. Actually, if I can, I don't know if you guys have handy the EPS estimates for Quality. I have the EPS estimates for Prabhat, and I'll get to that. Just trying to draw a comparison since Navneet was speaking about the cash conversion cycle. I think Agam gave us some analysis of what the...
So for FY18, the Bloomberg terminal says 8.6, and for FY17, it was only about 8.2. So no major growth when you look at the EPS for FY18 compared to FY17.
So I would presume at the current price, this one, which is Quality, would be a lot cheaper than Prabhat.
Yeah, it's 13 times.
13 times. Yeah. Versus Prabhat for FY19. Now, I've taken this out of an Edelweiss report, but look at what the estimates are. Revenue, EPS and valuations. Revenue estimates for FY19, 1923 crores. EPS of 7.5. This was as of November. I don't know if they've changed it, but this was as of November, so fairly recent. I'm presuming that they won't change EPS estimates for FY19 in a matter of 1 month. But therefore, that makes the stock at 200 rupees, by the way, not at 207, traded about 26 times FY20 EPS. Sorry, not even FY19, FY20 EPS. Now, this is expensive in terms of valuations, but let's just see what the stock is doing over the last few days. Let's see what the stock is doing in today's session, and let's see what the brokerage calls are. Now, firstly, the consensus rating and the consensus price target for Prabhat is 171. So while we have 8 buy calls, you can safely assume that most people's price target is a lot lower than what the current market price is. I can attribute this to one reason. Both Matrimony.com and Prabhat Dairy were slated to meet a bunch of mutual fund investors or institutional investors in today's session. I don't know if the meetings with Prabhat Dairy have gone so well that mutual fund investors are going out and buying the stocks by the dozens, but it's a big move. The only event that was coinciding with this move is the fact that they were meeting a lot of institutional investors. It's trading at a substantial premium to the peers as well, and this is something that we just try to show by the valuation metrics as well. And then you look at, I mean, you have 33 times the current year earnings, but then you look at the kind of volume surge that we've had in Prabhat Dairy in today's session. I mean, this is a substantial premium in terms of volume, substantial move up in terms of volumes compared to the 10-day average or the 20-day average as well. So the stock is moving up today in line of all the dairy companies, but this one is having a phenomenal move individually. Volumes much higher. They're slated to meet, or they probably have met a clutch of institutional investors as well. But just looking at the valuations, FY19, FY20, this would arguably be one of the most expensive dairy companies. So the only question mark, if at all, is on the valuation front. But we had a fantastic interaction with the management of Prabhat Dairy about less than a month ago, and I would urge anybody who wants to know anything about the company to go onto our website bloombergquint.com, search for Prabhat Dairy, and you'll get a really solid interaction that we had with the management, explaining everything about the business model. So that's something that you can do if you're indeed interested in knowing why is it, or what are the reasons or the fundamental factors behind a company like Prabhat gaining so much of attention from institutional investors. 17% for a dairy stock is not something that you usually see.
That's right, Neeraj. In fact, you were highlighting the Edelweiss report. I think one factor is that they are meeting multiple funds in today's session, and also I think this is the company which has been focusing on value-added products.
Yes.
And I don't know what's the proportion of the B2C revenue, but I guess that's on the higher side since they are focusing on the value-added products. And if your B2C pie is higher, your cash conversion cycle becomes lower. So I think that's one factor which could be working for a company like Prabhat Dairy, where even if you look at the inventory days, they've been on the lower side. So do watch out for all these dairy stocks in today's trading session. Neeraj, do you have something more to add here?
No, this just answers your question, Navneet. Our producers have been proactive in doing this. You're talking about the value-added products and the consumer business. So I think in the interaction on November 14th, and the story will come up on the side, by the way, that Prabhat aims to double consumer business by FY20 from where it is currently. I think Quality too spoke of similar numbers, if not the same, but Prabhat Dairy certainly seems to be wanting to do so. So good move there on this stock in the session today. Back to you guys.
Okay, so that's about the dairy side, but let's also focus on the paper stocks which have been surging in today's session, and that's not only today. Paper stocks have been buzzing since the last two sessions, as there's some news that the capacities in China have been shut down because of some environmental compliance there, and most paper stocks have seen a surge between 7 to 12%. As you can see on your screen, you've got stocks like JK Paper, Ruchira Paper, and also West Coast International. Even the small cap, mid cap for the likes of Malu Paper have seen substantial gains in today's trade. In fact, earlier today, we connected with Subhash Chandra Garg of Ruchira Paper to get an idea of the pricing and export trends witnessed in the industry. Listen in to what he had to say.
The prices after GST has reduced about 6-7%. Now the prices have again going up, and on the same level which was prior to GST. So the same level now, 6-7% prices have gone up. Yeah, we have exported around 1,000 ton of paper to China in last 2 months, and we hope that our quality is quite acceptable in China. So we hope to get further order and may export some more quantity to China in coming months.
Wow, what a move there. And of course, I'm sure this story as well, or the interaction, would be on the website too. So if you want to know more about what Ruchira Paper had to say, you can log on to bloombergquint.com and try and figure out. Navneet, of course, give you a lowdown of what the interaction was about. I mean, this whole China angle otherwise. But if you want to know more details, do log on to the website as well. Okay, Hemen Kapadia of Choksey Securities is with us. Hemen, I don't know if I can shoot a question about paper companies to you.
Just a minute.
Okay, we'll talk about these in just moments from now. But do watch out for, I mean, almost all of these paper counters. Any idea about the valuations that these companies are trading at?
Oh, sure. So I think it's on the lower side, and probably that's the reason. People are talking about China, but that's been there, I think, in the last 4 to 5 months. We've heard, HEG and your other companies from the likes of Rain Industries, which have done well. So the reason remains the same. There are some environmental compliance issues in China because of which some capacities have been shut down. And I don't know, one of the management also highlighted, I don't remember the name exactly. So they've shut down capacities of waste paper, which is used to actually make pulp, which is a basic raw material to make paper. And the pulp prices internationally have gone up. But I think that's besides the point. If you look at the valuations, every company is trading between 13 to 15 times. And not only that, look at price to book, price to sales is just about 1 time. So I think these are the companies which have not moved in the last 3 to 4 years. It could be a valuation catch-up definitely alongside the China angle.
Well, these stocks are certainly moving up, and not just today. I think Ruchira Papers has had a good run, probably over the last 1 month. I would reckon some of the other counters too have done that. So do watch out for these companies. Okay, I also think we should watch out for Reliance Industries. Let's just bring up that stock. While we are just waiting for Hemen to load his charts, let's bring up Reliance Industries because that's the other stock in focus on an active day when paper and some of the other counters have done so well. Reliance Industries is correcting in the session today. In just moments from now, Pradeep will give us a really good chart sense of what's happening with Reliance too. So that's something you've got to watch out for as well. But yeah, a lot of traction in paper, a lot of traction in dairy. A lot of traction in certain other mid-cap names like Repro India. So these 3 or 4 counters are doing rather well for themselves. Okay, Hemen, first, thanks so much for joining in. Since we were talking about paper, let's talk about paper first. Ruchira Paper, Seshashahi, these are not your trading stocks generally, but if you can look up the charts.
Yes, very good afternoon to you, Neeraj. Thank you for having me.
Thank you so much.
Yes, I think somehow Ruchira and Seshashahi both are in a very typical pattern, Neeraj. Both are on the 4th waves on the monthly chart as far as the Elliott wave is concerned. So simply put, they were in a corrective phase after a smart up move, and now this corrective phase is probably ended and we have begun the next round of its up move, Neeraj. So honestly speaking, I think Seshashahi looks better. That's a tongue twister. Looks better than Ruchira Paper, but very similar movement. And what we are seeing today is the beginning of the week. We need for the month, the week to end. But if it is what I think it is, then I think it's the onset of a 3 to 4 month uptrend from your, Neeraj, in both these stocks, Ruchira and Seshashahi.
So have you moved from wave 4 to wave 5? Because I understand wave 4 goes down, right?
Yeah. So third over, the fourth was sideways, a zigzag, inverted flat, irregular, but the fifth started.
Okay. No, I mentioned that because in the beginning of his analysis,
Neeraj and I will have to take some lessons from you after the show.
No, so it's a simple, 5-wave pattern on Elliott wave, where wave 1, 3, and 5 is up. 2 and 4 is down. So since you mentioned wave 4 and then we were talking about targets upwards, that's why I had to clarify that.
Okay, so wave 5 would have more upsides for counters, and these companies are slated to hit wave 5 now.
Yeah, they've started. It can be a 335, 535. That would have 5, 2, ABC 3, ABC 4, 5.
Wow, understood all of that. Okay, this is interesting. Thanks so much. If I thought futures and options from Navneet were Greek and Latin, this is...
Trust me, that's better.
Yeah, that's much better than what happens to some of the charts. But speaking of charts, and I think Pradeep will just give us a chart on Reliance as well. But a quick thought on the markets, Hemen, and what do you make of this move for the last 3 days? Is there more in store?
I have a feeling we're slightly overbought. I would be slightly worried. I'm not worried, but I would be slightly cautious. See, when I came last time, we were building up open interest positions on last Monday. I thought it would turn. It took a two days more. Neeraj, after the expiry, 32 lakh Nifty were added as open interest. Bank Nifty we started with 15, added 6 lakhs. So 25 to 30% open interest added. There's no benchmark, but roughly a 250-point move can be expected when such huge open interest positions are added. When the assumption that is for the long position was right, evidently it was. So now I think we've had a great run. We are getting a bit overbought, and yes, a VIX at 14.5, obviously due to elections, and we've had a very, very smart run up. So I'd say a bit cautious. I'm not saying one would be very, very bearish, but without a correction, making substantial upside, I'd be slightly reticent. So I'm not very bearish, but I'd be cautious. I wouldn't go long fresh, and maybe buying a few puts wouldn't hurt you, just for safety.
Just for safety, buy a few puts. However, this is more a safety call. Hemen says that it's just the run-up, I believe, Hemen, that is leading you to give this call as well. Okay, talk more about this too. But before that, and before we get in stock-specific calls from our experts, we should get in Pradeep to speak about Reliance Industries and why is it that Reliance Industries is in focus, aside of course, all that's happening fundamentally in terms of the run-up, in terms of Jefferies downgrades, etc. Pradeep has done some interesting chart analysis on Reliance Industries. Pradeep, what does this tell you?
So if you look at this, there's a 3 months daily chart at the screen right now. First of all, you can see that October tops and the tops in November were around the same level, 955 or so. So kind of a resistance at around those levels we had spotted. But this is not really a big worry. What is worrying me is the movement on Friday, and that is followed up today. If you look at it, when index has been moving up, Reliance Industries having the highest weightage is actually moving down. So on Friday, Maybe it was because of Jeffrey's report, could be, I don't know, as Neeraj mentioned, but on Friday, the pattern that you see, this is Thursday, Friday and today. So look at what happened on Friday. We went to the highs that we had seen on Thursday, and then we went below the lows that we had seen on Thursday, and we actually closed below that level as well. This is the kind of, this is what we call a bearish engulfing. And today, again, we are quoting below the previous day's low, which kind of confirms this pattern, which is really surprising in this kind of market. So we tried to analyze this pattern further, and over the last few months, Reliance Industries has shown this pattern around 10 or 11 times. 11 times in total, as you can see on this table. 8 out of those 10 or 11 times, the stock has declined. And this is the beautiful graph that you can see, which actually tells you the yellow line in center is the mean decline after this pattern. Let's show the entire chart because it would be confusing otherwise. And if you look at it, you know, it falls most of the time. For next 20 days return, if you try to calculate, the mean is around 7% or 7.8% on the lower side. That is the kind of return it has given. That is the kind of declines it has seen after this engulfing pattern. The worst case scenario could be much lower, but let's see, if you look at the mean, that is quite significant. It could take the stock down to, from Friday's high, if we are calculating, around 875, 880 could be the levels that we are talking about on Reliance. I don't know whether Hemen will agree or other analysts will agree with me that there is that kind of a downside. We're not really predicting it, but we are just telling you what the Bloomberg terminal has kind of given us the indication of.
Does this always happen, Pradeep?
No, so you can see.
Does it have to move down a particular level? Because right now it's just down 4 odd points. So it's not a substantial cut.
So we have already seen a decline. If you look at the Friday's high, that was around 957, if I am not wrong. And from there we have corrected already. We are probably halfway through the correction that we are talking about. But if you look at the average correction, as it shows you, 8 out of 10 times it has declined after this pattern. And the mean correction is around 7 to 8%, which is really significant. And that too happening in this market where there are very few large cap stocks which are actually declining. The index itself has recovered quite a bit, is moving up, but we are still below Friday's low currently at this point of time when we are talking. So that is really significant.
Yeah, 934 I think was the high, if I'm not wrong.
Okay, 934.
Yeah, that we clocked.
I was looking at the month high probably.
Yeah, so 934 was the high then. We're now at 916, so that's about 18 odd points shaved off already. If indeed we get back to the mean correction, and mean need not mean that is what the correction will be, but if we indeed hit those levels, then there is some more downside left as well. Okay, before we get in Jay Thakkar's thoughts on his stocks as well and his market view, I mean, just a thought on Reliance. You need not agree with Pradeep at all, by the way. This is, anyways, it's not Pradeep's prediction, it's more what the terminal is showing.
I more or less agree with him with a small difference. Reliance has been range bound between 872 and 959, and I have a feeling there could be one small upward blip before it happens. So what he's saying of it slipping below 900, I agree with, but I just feel there could be one small blip on the upside before that happens. And yes, we have been coming, last time we turned from 892 or something, 895. The range is actually at 872, the 55-day moving average is at 893. So I think what he says makes a lot of sense. We are due for a sub 900 thing. It's just that whether we make one last attempt at 940 or no is of academic interest.
Okay. Let's wait and watch what happens to Reliance Industries. It has the potential to be a bit of a drag as well. Remember, the last time around, Reliance was the one that was supporting the index in a big way. The other stocks were not. For now, Reliance on the last 2 days is in a bit of a downtrend. Let's see if it extends itself or no. Jay Thakkar, AVP Equity Research at Alan Rathi Johnson on the show as well. Jay, a quick word on if you have a trading strategy on any of the key indices, and then couple that up, of course, with 2 stock recommendations for this afternoon.
Hi, good afternoon, Neeraj.
Good afternoon.
Well, Neeraj, I think that as far as the index is concerned, I think, we are quite bullish on this, and since 10,000 levels, in fact, we were quite bullish since it had, in fact, reached the lower end of the falling channel, and we had seen the highest low, in fact, build up at the 10,000 strike, and there was quite a huge or a high probability of a reversal from those levels, and we had in fact thought of around 10,170 and thereafter 10,250, which has already come, and it has in fact moved beyond that as well. Now on the hourly charts, if you check, then there is a clear impulse move right from 10,033 levels till the, today's trading session. I think this impulse clearly indicates, Neeraj, that this range of a falling channel of 10,400 to 10,000 approximately is going to be broken on the upside, and definitely I think that going forward we are going to see 10,800 levels on the upside, because this range will be shifted on the upward once it takes off 10,400. When it takes off, I think it might just happen with the Gujarat election outcome or the results of that, and maybe if it happens before that as well, if the market is pricing it that correctly. That is one thought on the Nifty. And as far as the stocks are concerned, I think we are right now, as of now, focusing on the cash segment calls, and one of which I really like is Gujarat Heavy Chemicals Limited, which seems to have completed a three-wave declining structure. From here on, we are expecting this stock to inch towards 315 initially, and thereafter it will go and test the levels of 325 on the upside as well. On the lower side, 290 is now a very good support on GHCL. So this is one stock to keep in radar. Another stock which I have, on the buy side is Aurobindo Pharma. I think Aurobindo Pharma too seems to have completed a good decline, and the decline has been in fact a three-wave corrective pattern, and the stock seems to be rising well, forming high tops and high bottom now on the hourly charts with the buy crossover in its momentum indicators. So I think Neeraj, Aurobindo Pharma too from these levels can see the levels of around 720, 725. On the lower side, it has got a good support around 675 to 680 zone. So with that as a stop loss, we have a buy recommendation on Aurobindo Pharma as well.
Okay, Hemen, what are your top trading ideas?
I like a couple of things, Navneet. I like Coal India, entry at 268, stop loss 264, target 276. I like Strides Arcolab Star, entry 815, stop loss 807, target 831.
Okay, so those are a couple of the trading strategies from Jay Thakkar as well as Hemen Kapadia. But look at the markets. I think they've inched higher in the last 15 to 20 minutes. Nifty is very firmly now trading above the mark of 10,000, 10,317. The Bank Nifty is also inched higher. It's above the mark of 25,400 right now. And remember, on the upside, as we were mentioning, watch out for the 20-day moving average on Bank Nifty, which is about 25,466. And in terms of sectoral indices also, you've got the Nifty FMCG, Pharma, PSU banking space, which have done well, and particularly your heavyweights, ITC, which was up almost 3.5%, which supported the market on Friday, has been supporting the markets in today's session as well. ITC is currently about 1.6 at 266.5. Hemen, on the charts, do you think ITC is bottomed out now, and from these levels one can expect higher levels? Because I think there was a long phase of consolidation for ITC.
Absolutely right, Navneet. You hit the nail on the head. It's been a long time. ITC is finally woken up. Failure swing on the weekly charts. Yes, I think a medium to bottom has been in place. Volume is higher than the last 9 weeks. So everything seems to suggest an intermediate bottom in place. And yeah, I don't expect a tearaway rally. But yeah, I think temporary, at least on the dailies and weekly charts, the worst is over.
Very interesting.
Okay, so that is what is the chart is suggesting right now. Quest Corp is an interesting stock that we should look at. This stock is up around 7.5%. Look at it, quoting at day's high. Now, Jay, have you had a look at this chart? Any views on Quest Corp?
Well, see, Pradeep, the data is less, because this was recently listed, but then I would say that this stock, since its listing, has been forming clearly high tops and high bottom. And in fact, recently, if you really check, then this stock has provided a breakout from a sideways consolidation, I would say. Rather, it's not the exact channel, I would say, but yes, we can say that it has provided a good breakout from a triangular pattern. And on the upside, the aggressive targets for the same, comes to the levels of almost 1,150. And on the lower side, now this stock has a good support around the levels of 922. So I think, yes, that's what it is. It can inch towards 1150, and 922 will be the stop loss.
Okay. Let's talk autos. In just moments from now, we'll talk about Maruti as well, and the Morgan Stanley note on that stock, which has given a bull case target which is substantially higher. But before we talk about Maruti, there is an interesting chart on the Bloomberg terminal about the market caps of Bajaj Auto and Hero MotoCorp. And if you can see that the blue line is Bajaj Auto, the prices or the market caps of Bajaj Auto and Hero MotoCorp were looking like converging. For years, Bajaj Auto stayed above, and then in the last 3 odd months, if I'm not wrong, yes, this was on August. In August, the market caps of Hero MotoCorp and Bajaj Auto look like they will converge. Since then, I think both have had different direction in the interim. I would presume that would probably be the reason, but I don't know if any of you have different thoughts on this. But it's just a very interesting chart analysis of what's happened really between these two auto majors. Eicher is a different kettle of fish altogether.
But how do you really take advantage of this, if at all? Hemen, is there a strategy?
I don't think so. If I have a technical explanation, Bajaj Auto is in long-term uptrend. Hero Honda monthly MACD is given a sell, so I guess that's my differentiation. So
you think the gap could widen?
Yeah, I think so. That is a possibility.
So that's interesting. The gap could actually widen. The Hero Moto may fall from here, and Bajaj Auto is more likely to gain further. So there's still not time to talk about mean conversion, you know, when you go long on one and short the other one. Probably the trend is suggesting something much different from what we thought prima facie, that maybe there is an opportunity that this trend will reverse, and therefore we could just take a trade here. One stock which has been moving up with the good volume since morning is Arvind Limited. If you look at it, is up 4% now, and even over last 1 hour or so, volumes have remained significantly high. Stock is quoting very close to the day's high level. Jay, do you have a view on Arvind? Would you go long?
Well, see, Pradeep, I would say today this stock has in fact reversed from the downtrend line resistance. Now, if at all from here on, Pradeep, this stock fails to surpass the levels of 450, 354 on the upside, then I would say that one more leg on the lower side can get this stock back to the levels of around 435. I would say that would be the wave E, that is the final leg on the waves on the lower side of the symmetrical triangle pattern that's been forming right now. So if it surpasses 453 on the upside, Pradeep, then yes, you'll be having that breakout on the upside of that from that symmetrical triangular pattern, and thereafter we can have at least that 10% move from there on, and we can see Arvind inching towards 500. Failing to surpass those levels from here on, we'll take this stock back to 435, some more time for consolidation. So I think the way this stock can be traded right now is either going long on this triangle by buying around say 460 call option and 430 put options, or else the one strategy which we have recommended today to our clients is if at all, if it do not surpass 453, then here on one can buy 450 put options, sell one lot of 430 and sell one lot of 420 call put options. So what will happen in this bear put ratio, or bear put I would say ladder strategy, the cost is very minimal. It's almost like 15 to 20 paise, and that's around 3 to 400. If it surpass or spends some more time, 4 to 5 trading sessions, and one can see good amount of profit. Even if it takes off 453, I mean one could go long in futures or cash, and there's nothing to lose much in strategy because it's just costing 15 to 20 paise on a gross basis.
Okay. Pull up Hinduja Ventures. That stock's been moving up in the past few sessions. It's touched its fresh 52-week high today, trading higher by 16%. Hinduja Ventures was up almost 12 to 13% on Friday as well, so trading at 731. Jay, on the charts, does it suggest any sort of fresh breakout for Hinduja Ventures?
Well, I think, as far as Hinduja Ventures is concerned, this stock too has been, trading well enough for sloping channel, and I would say that, it's quite near to the upper end of the channel. And at these levels, I think, it's quite prudent to take profits off the table, and I think on the upside now, the stock really needs to close above the levels of 700 on a weekly basis. If that happens going forward, then yes, we can say that, this stock is again seeing a good breakout on the upside. Today it has done so, but whether it will do on a weekly basis or not is something important from that point of view. So I would say it is trading about 700 levels, which is a key resistance. So I think booking profits here on is good. If it falls back towards 700 levels on a weekly basis, then also I think again it would provide an opportunity for the short-term traders to get back into the trade. And if it fails this breakout on the upside, then I think one can just miss out the time to book the profits. This kind of stocks really need to be watched on a closing basis on weekly charts as well, as the daily breakout sometimes really creates that noise and a whipsaw. These are not day-to-day trading stocks, Hence, I would say a weekly close is very important.
Okay. But now, getting our research team to talk about some key stocks. Firstly, Morgan Stanley has raised its target price on Maruti to 10,563, which is the highest on the street. It also has a bull case price target of 14,400 rupees. Yatin Mota is here with more on the Morgan Stanley rationale. And Yatin, arguably one of the most bullish voices on Maruti.
Clearly, Neeraj, and look at the bull case scenario. 14,400 means a 59% upside from Friday's close. So, a large cap probably, having potential of a small cap in terms of returns. But if you look at the rationale why Morgan Stanley is bullish, and they have put a target price of close to 10,500 odd, is the fact that they are expecting that the overall earnings for the next 2 to 3 financial years could be growing at a 22% compounded annual rate. More importantly, this is one of the most profitable OEMs which you could compare on a global basis. So in the small car segment, the kind of market share the company has and the kind of new product pipeline that they have clearly justify the premium valuations moving forward for Maruti Suzuki, and that is the reason why Morgan Stanley does believe that there is a substantial upside from the current market price, and clearly in the bull case scenario they're expecting target prices in excess of 14,400 rupees per share.
Okay, Yatin, thanks a lot for bringing in those details with regard to Maruti, a stock which has been on a tear. But moving on to the buzzing stock of the day, and that's Vaibhav Infra. Nikki Merchandani joins us with more details on that. Nikki, over to you.
Hi Navneet, Vaibhav Infra is the stock that we're picking up for buzzing stock today. The stock has risen as much as 3.7% the last time I checked, to its highest level that we saw in early September 2015. Now the stock has been rising for 3 consecutive sessions. In the previous session, on a Friday, we saw the stock rose as much as 8% and the trigger behind this move is NHAI declaring the company as the lowest bidder for its 75-kilometer Rajasthan project, highway project. The bid cost for the project is around 1,161 as compared to the project cost of around 1,070 odd crore. The construction period for this project is nearly 2 years after the appointed date, and the LOA would be provided to the company in the next 2 months after the date of bidding date, that is November 21st, 2017. And just to give you a little brief about the company now, Antique Stockbroking says that the company is at inflection point right now and it's one of the best road infra play that we could have. It has just finished its refinancing exercise and it's focusing on asset monetization. It has already refinanced 7 of its BOT projects and is in talks for refinancing more of its 2 projects for that matter. In terms of the stock returns, if you'd see on YTD basis, the stock has given a return of more than 50% and on year basis, it's a 60% return that we're looking at for this counter.
Okay, thanks Nikki for these details. Vaibhav Infra has been an outperformer, though if you look at today's move so far, it's up just 2.5% after the announcement of this news came in. Jay, if you have had a look at this chart, what do you say? Is it still in an up move and you would like to enter?
It's about Vaibhav Infra, right,
yes.
Pradeep?
Infra.
See, well, Pradeep, I would say that yes, because the reason for that is I like more of Vaibhav Engineering than Vaibhav Infra. I would say Vaibhav Infra has seen a good rally on the upside. Now I think the risk reward is actually not suitable for the traders because it has achieved the conservative as well as the aggressive target of the triangular pattern. And despite that, we have been seeing that high tops and high bottom coming. But then, the data which I have is from 2015 and from that, what I can make out is that, it has reached the aggressive targets as well. In fact, Vaibhav Engineering, which has recently provided a breakout from a triangular pattern, does offer a better risk reward from these levels because I'm targeting almost the levels of around, say, 550 on the upside as far as the medium term trend is concerned. On the lower side, I believe that 330 is a very good support for Vaibhav Engineering. So I would in fact rather go for a bet for Vaibhav Engineering rather than Vaibhav Infrastructure, despite of whatever fundamental news or some momentum still being left, and we can see those high tops and high bottom being coming in Vaibhav Infra chart, but then it's not favoring the short term traders risk as of now.
Okay, so that's the view coming in on Sadbhav Engineering as well as Infra. But let's shift focus and see what the domestic institutions are doing. And Reliance Mutual Fund has increased its position in Airtel and Tata Motors last month, while HCL Technologies and L&T fell out of favor. Jayesh Khilnani has drawn up a list of all the big buying and selling done by the mutual fund house in the month of November. Jayesh, over to you.
So Navneet, the clear picture that emerges is that, this is a stock-specific month that Reliance Mutual Fund has focused on, and, no sector has actually come out as a trend. So let's have a look at what, their activity was in terms of, the month of November. So have a look at the increased stake. Telecom at the forefront, Bharti Airtel, they added about 84 lakh shares. A clear trend emerging in Tata Motors, Bharat Financial and HDFC. That is because in the month of October also we saw that they had increased stake, and so the same case has happened in November as well. And also they added Bosch to the tune of about 75,000 shares. Now let's have a look at where they actually decreased their stake. So Federal Bank led the way over there. They reduced their stake by about 1.8 crore shares. HCL Technologies over here, this is the second month running that they have actually reduced stake. So trend emerging for HCL Tech as well. L&T, Shriram Transport and IndusInd Bank, a few other names to add to that list. So, look at the entire picture and you can see that this is stock specific and there is no sector that they are actually focusing on. In terms of the new buys and sells that they had in the month of November, well, they participated in the IPO of HDFC Standard Life and New India Assurance. Now, contrasting returns have been generated from this. HDFC Standard Life from the time of listing has gone up more than 30%, and New India Assurance, in fact, has declined about 27%. Sadbhav Infrastructure, you're just speaking with a guest about that. They have, added about more than 6 lakh shares. PNB Housing Finance and Dixon Technologies also makes their way into the portfolio. In terms of what they actually sold and what goes out of the portfolio is Ganesh Housing. Not much activity over here, but some names that you have is Good Luck India, about 6.5 lakh shares that they sold off, and Automobile Corp of Goa. So all in all, if you look at all the names that we have, there's no sector trend, but definitely stock trends emerging over here.
Okay, Jayesh, thanks a lot for bringing all those details. Well, those were a couple of details with regard to the Reliance Mutual Fund, which were the stocks which they bought or reduced their shareholding in the month of November. And one stock which actually stands out is Bharti Airtel. If you look at this stock where there was so much of talk with the Reliance Jio coming in, what will happen to the incumbents? And clearly, despite of dismal quarterly numbers which one has seen from the likes of Idea or Bharti Airtel, the stock price of Bharti Airtel has been trading at multi-year high. In fact, I was just checking the chart. It's very close to its all-time high levels, which is somewhere about 563 or something. Jay on the chart said these levels of 530, Bharti Airtel, which is trading at multi-year highs. Would you recommend initiating any sort of fresh longs, or people who would have taken long, would you advise them to cover their profits right now?
Absolutely not to book profits as of now. I think the fresh trend has just begun, and Bharti Airtel, in fact, as you rightly said, Navneet, that it's a multi-year high, and that really means that this stock is in fact taken off this range after a long time. It's been almost a decade, as far as I know, as far as I can figure it out on the chart, that this stock has provided it this kind of a breakout, as this entire sector, especially this stock, was under quite a bit of pressure. And now I think the way the volumes have picked up in this stock as well as the sector, and the momentum shift we have seen from sell to buy, I feel that Bharti is really out of the woods. We have already recommended this to our clients, and I would say for a target of around 715, I think Bharti Airtel is still a buy at these levels, because 715 really offers a good risk reward from these levels as well, because on the lower side 450, 460 is a very good support. So so someone might think of around 15% on the low side, but on the upside one can just eye around 40 to 45%, I think, going forward. So I think it's a good bet as far as the telecom sector is concerned. I think apart from Reliance, that's the only stock, I think, which has more of clarity compared to any other stocks in telecom.
Actually, looking at the other column, and if you look at Federal Bank, which is a stock in which Reliance Mutual Fund has reduced exposure from October high, this stock is already down 20% in this market. So compared to the index or even the mid-cap index, it's a big underperformer. Do you think it's an opportunity, Jay, to get in, or you'll continue to stay short or stay away?
Federal Bank, I think, is a buy. Pradeep, definitely it's a buy. Post results, in fact, for 2 days or so, we saw this stock. In fact, that time it had provided a breakout from a triangular pattern. In fact, reached, almost two days it was trading quite higher, and thereafter we have seen this stock, in fact, quite under pressure and a good amount of profit booking coming in this stock. But now I believe that the correction is almost nearing, and from the lower end, we have seen a good impulse wave that's been formed. And post results, Pradeep, the 2 days move which we had seen, that had come after a triangular pattern breakout, which generally is a wave 5. So I think that was a trap. In the fifth wave, most of the traders looking at the results just got trapped at the higher levels. I would say traders, not the investors, because investors, I would say, since the previous move was clearly an impulse move, I think once this correction is over, we're going to see next move on the upside, and that would be an impulsive as well. And the equality target on the upside would come near to about, say, 175, 180. So I think it's good amount of move that can be expected on the upside. Even if that happens in a year or so, I think percentage wise it's a good move. On the lower side, I think that this stock has a good support of a retracement of the previous move at around the levels of 102, 103, at least for the short term. So I think yes, it's a buy, and someone is really holding out even for short term. I think with that as a stop loss, one can continue holding it.
Okay. Stay on, gentlemen. So much more to talk about. In a bit, we'll also be joined by Rajat Sharma of Securities, but it's 3 p.m. Actually, a couple of minutes past that, but that time of the show, when you get in Yash with the Fab 4 stocks of the afternoon, rather for the day. Yash, good afternoon. What's finding its way to your list?
Good afternoon, Neeraj. So, Parag Milk Foods tops our Fab 4 list today, and the stock has gained the most since June of 2016 after the company said that it has tied up with Taj SAST Air Catering for the supply of its milk-based food products on international flights. So, good news coming in for there. It's raining orders for Ireland FS Engineering, and rightly so, the stock is locked in a 5% upper circuit today. The company said that it has won an order for the construction of a gas pipeline worth about 216 crore rupees from GAIL India in the states of Jharkhand and West Bengal. The company had received a similar order from GAIL India for the construction of a gas pipeline in Kerala and Bihar states as well. Jet Airways is flying high today. The stock is up about 4.5%, almost 5 while we speak. This comes on the back of Edelweiss upgrading their rating on the stock from hold to buy, and also raising their target price to rupees 822, which roughly translates into a potential gain of about 23.5% from its Friday's close. Also, they say that they are confident about the measures that the company's new CEO has taken to turn around their company's stressed assets, along with their focus on cost rationalization and improving the health of their balance sheet. So do watch out for this one. Lastly, some earnings reaction coming in from Omax Autos. Now the stock has gained the most today since August of 2016, with both the revenues and net profit coming in significantly higher, almost 230% improvement. Margins too seeing almost 120 basis point expansion on a year-on-year basis.
Wow, it's some list. Thanks a lot for that, Yash. 3 or 4 interesting names. We've discussed dairy a lot. Let's talk about some of the others. Jet Airways for one. Harit, I don't know if it's still in the F&O ban, but it is. And the stock is up 5% today after, I would reckon, the Edelweiss note, which raised the target to 822. So big upgrade by Edelweiss on the target price. The stock is obviously gone up today and staying up today, not by virtue of futures buying, because the futures buying, if any, would have to be squared off in the last half an hour of trade left. You can only take intraday positions. Maybe there's cash market positions that are happening today.
That's right. In fact, if you look at the Jet Airways futures, we've seen a bit of unwinding coming about, and when a stock is in a ban period, you can obviously take an intraday position, but you cannot roll over those positions. Otherwise, one has to pay some bit of penalty. But that's Jet Airways December futures. I just want to talk about Wockhardt Pharma. At the start of the show, we did speak about this counter. It's gone up on account of very high volumes in the cash side. Even the futures have seen some significant amount of OI addition. It's up almost 25%, Hemen, 760 on the December futures. How does it look, Wockhardt Pharma?
Looks great. Rounding bottom, has posted a short-term, medium-term, long-term bottom. Looks set for 4 figures. It could take some time. Positional call. Resistance at 731, 797. Buy on declines.
Okay. Fair call. So buy on declines. I think I understood that for sure.
He doesn't like Wockhardt, the way he was going about it.
He was not working hard for Wockhardt, let me put it that way.
No, I was ready with it. I like the stock.
Okay, fair call. What about Jet Airways? I'm just trying to pull up the stock price volumes picture for Jet Airways and see there as to what's happened on the volumes from the cash side today. I think the 20-day volumes were high, and in today's session too, outperforming volumes by a very narrow margin on the National Stock Exchange, though Jet Airways. But it's up about 5%. That's the volume picture for you. The blue line is the 20-day average. The white line is how they've done in today's session. Obviously higher than the 20-day average, which has also moved up a bit. But do the charts suggest that people can buy this one? Because it's a very volatile stock otherwise, Hemen.
Yes, I totally agree with you. It's very, very volatile. I think Indigo is relatively more stable, but Jet is very interesting, Neeraj. It's in a 8-year channel on the monthly chart, and the upper band is still far away. It comes in around 745 right now. But I think there are technical positives. The technical green shoots are very much apparent, and it is looking good. And if you take a slightly longer term point of view, it's forming a rounding bottom. The quarterly charts are looking interesting. So Neeraj, it's taken a long time coming. I have a feeling that it's setting the stage for a breakout, which hasn't yet occurred. It comes in at 745, but the build-up that we're seeing is technically sound and positive, and even the quarterly charts are confirming that. So it's not a short-term call, but I think it seems to be setting the stage for a jump sometime down the line. But it's not a short-term call.
Not a short-term call on the trading front. Let's figure out the fundamentals with Rajat Sharma, CEO of Securities, joins us on the show. Rajat, so much to talk about, but I know you look at some of the pockets related to oil and gas and otherwise very, very closely. I'm correlating Jet Airways out there. What's the stance here? We heard chartists speak about how crude is slated to inch up higher. That might be negative for Jet. But Edelweiss, on the other hand, believes the set is staged for a big takeoff. Their target price is 822. What is your thought on Jet Airways?
Yeah, so Neeraj, to be honest, I don't really have anything from the aviation pack in my portfolio, but we were short on Indigo until some time back. The reason is, again, as you said, crude prices inching higher, and most of the advantages that these companies were enjoying previously have sort of gone away. On Jet Airways and Indigo, I have this view. I've recently done a post on this where I was looking at the enterprise value of the two companies and the debt that they have and the promoter holding of the two companies. Look, I don't think Indigo deserves to be 3 times more or 3 times highly valued than Jet Airways. Jet Airways enterprise value is right now 3 times less than that of Indigo. Indigo, personally, I think has always been a more expensive stock, and at some point this will balance out, and a lot more investors who have exposure to aviation will move out of Indigo and come into Jet Airways. Also, Jet Airways has a much smaller equity base. I think it's about 3 times less in terms of, or 2.5 times less in terms of the number of shares that are in the free float. So going forward, I do expect Jet Airways to outperform Indigo. So on that logic, you could look at buying the stock. But again, as you said, crude prices are rising, so the margins will suffer for these companies going forward. However, that could possibly, it takes about 2 quarters for that to adjust. And I guess the market and the analysts who cover this are aware of this. So there could be some more upside to the stock. More so because I think a lot of investors would move out of Indigo and get into Jet Airways. Because, personally, I think they can expand a lot more with the kind of, both the promoter holding and the number of shares they have in the market.
Okay, so that's the call on Jet Airways. Another set of stocks that have been doing well is in fertilizer space. Rajat, if you track that, do you have any picks?
No, actually nothing in the fertilizer space. For the longest time, I believe that fertilizer and sugar stocks are extremely heavily, sort of regulated. And this is probably the first time that we're seeing a lot of activity in fertilizer stocks. Typically, these stocks move only around budget time or whenever there is some policy on fertilizers. And quite frankly, I don't understand this space very well at all. So nothing there.
Okay. Fair call. We'll talk about a bunch of stocks. Rajat, we'll ask him about some of his ideas. We'll ask his market view too. I think Hemen wants to point out certain stocks, but it's that time of the show when we get in Navneet Saluja to talk about what are the highlights of the F&O space, what could come into the F&O ban, what could go out of the F&O ban, and Navneet, what are the stocks that are falling on your radar?
Well, 3 stocks for the day, Neeraj. These are likely to enter into the F&O ban. If you look at the overall open interest as a percentage of market-wide position limit as of Friday for these 3 stocks, for Fortis Healthcare was 89.5%. For Dewan Housing, your usual suspect in the F&O ban period, was 89%. And DLF also 86%. Now, if you look at the action for all these 3 counters in the futures as well as the option space, there has been a net build-up in terms of open interest addition for both on the future side as well as couple of option strikes. So for a stock to enter into the F&O ban, it has to breach the 95% mark with regard to the market-wide position limit. So we need to wait and watch. And these 3 were the counters where, as of Friday, the open interest was hovering between the 85 to 89%, and nothing as of now, Neeraj, which can come out of the F&O ban. But do keep an eye on these 3 counters.
Okay, watch out for those names. They should come up on your screen once again. Nothing as of now, but each of these 3 counters have the potential to enter into the F&O ban as well and join the 6 other stocks that are a part of the ban today. Fortis, Dewan Housing, DLF. Hemen, any thoughts on any of these 3 names? Any one of these 3 names?
DLF looks good.
Looks good.
Yes, okay. It's woken up after ages. We've entered a 3, if not a 4-year up move. So looks good, notwithstanding whatever happens to F&O. Most of these real estate stocks now, India Bulls is not there, but that used to be a permanent member of the ban club. Now DLF seems to have taken its place. So, but the bigger picture seems pretty promising. Fortis, one gets the feeling that we have posted a bottom of sorts. We saw an upward key reversal coming in, Neeraj, from the bottoms. We've taken support at multi-year lows. Upward key reversal on the monthly chart, upward key reversal on the weekly chart. But yeah, what happens is once the stock comes into F&O, I mean, the momentum breaks. Can't make new positions, and till it comes out of F&O, it drifts. In a rare case, it shoots up, but out of 10 times, 8 times, it drifts. So I think the technical parameters would cease to stop working temporarily.
So Fortis, we did discuss in the morning that there could be some more trouble for Fortis after Max. This time a Haryana minister has written a letter asking for actions against Fortis Hospital, and we have seen this stock cracking in last half an hour of trade. Not sure if there has been any further development. Nothing that we have seen or has been reported, but the stock is down 6% now at around 138.
Well, let's talk stock ideas. Before we get in what dealing rooms are recommending in the session today, Rajat, Sharma, couple of stock recommendations. Let's talk about Moil first. Why do you like this one?
Yeah, so Neeraj, we were looking at this company, and first of all, this company has done really nothing for the last 7-8 years. The profits and the gross revenue has been pretty consistent, which actually is a good thing, because good thing compared to what a lot of other companies in commodity pack have done, because the last few years have been really challenging for commodity players. And what's interesting is that despite the slowdown which was so long in this space, the company still is a debt-free company. And if you see the manganese prices since August of 2016, they have almost tripled since then. And that's just now started getting reflected, because the first quarter the company reported 107% increase in the net profit, and I expect this to continue, because a lot of the increase in the manganese prices would actually start getting reflected on the accounts going forward. And be that as it may, besides that, I really like this company because it's got very healthy reserves. It's a debt-free company, as I said. And currently the dividend yield for the company is almost close to about 5%. So this, I really like companies like that, where you can buy and be confident that even if things don't turn around very quickly, which to my mind has already happened, they're trading at very, very good valuations. The current price earnings multiple of the company is about 15, which is pretty much average of what it's done in the last many years. So I'd like to deploy capital in companies like these, where you get a very healthy dividend yield, and the basic product which they make and sell, the price of that is increasing. So my targets for this company is, I wouldn't be surprised if this can pretty much double from the current levels of 230, 240 in the next 1 to 2 years. So this is one stock that we've recently added to our portfolio. And even if it takes a while for this to happen, I'm very happy holding a stock which gives a dividend of about 4.5–5%, and they've consistently maintained a very good dividend payout ratio for the last many years. Because as I said, it's a debt-free company. They have the liberty to give out more and more dividends going forward. So if the price does appreciate, as I said, and you buy it today, your dividend yield could actually be much higher than what it is today. So I really like this stock. We've just added this to our portfolio.
Okay. We'll talk about some other stock ideas as well, but it's 3:15, that time of the show, wherein we talk about what dealing rooms are recommending in the session today. Yatin and Darshan are here with their channel checks. Good afternoon, both of you. Darshan, let's start off with you first. What are you gathering from your sources?
Yeah, hi, Neeraj. One of the counters which has been spoken about today is Adani Enterprises, and there seems to be some news among quite a few dealing rooms in terms of some bit of positive news that would come in as far as their Australian coal mine is concerned. So remember, there were issues there, and they were not getting that funding, but there seems to be some news that indicate that there could be some potential news that could come in on the Australian coal mine. Cipla is rather flat in today's trade, but a large FII brokerage is actively pushing this counter to its clients. They are recommending that shift to some of the companies which have low US base right now and are growing and have sufficient portion of Indian exposure. So Cipla is the one, and PC Jewelers has been buzzing. Over the past 1.5 months, several new brokerages have initiated coverage. Some of the HNIs are buying this, and fundamental seems to be the only reason that was suggested to us by the brokerage house. They believe that valuations are much cheaper than its peers. So on several parameters, PC Jewelers fits the bill for some of the HNIs, and that is why they are accumulating. But Yatin, what are you hearing?
Well, as far as a few stocks are concerned, let's start with Wockhardt. That stock is quite active in the pharma space at the day's high, despite a sideways kind of a market. This is one stock based on FNO trends. Dealers are recommending a BTST. Also, Fortis, that is one stock, days low, was around 144, 145 levels, and clearly from there in the last half an hour of trade, we have seen some big selling coming in on high volumes. So dealers are indicated that we have some FI sellers in the counter. And look at this, Everest Kanto cylinders, a mid cap. Big volumes happen today, and day after tomorrow we have the company which will be reporting their second quarter earnings. But before that, we are looking at some strong activity in the market, and dealers are anticipating on the back of HNI action, we could see a short-term 10 to 15% upside in the counter.
All right, Yatin as well as Darshan, thanks a lot for bringing that dealing room check. Just 10 to 12 minutes for market to close. And Tata Communication is the other stock among the FNO securities, which has actually gained. It's not every day that you see a move like this on Tata Communication, which has gained almost 5% in today's session, above that level of 700. And also Tata Global Beverages, that's the other counter which has surged in today's session. That's trading higher by almost 3% at day's high. Hemen, among these two Tata Group companies, which are both in the FNO space, which is looking better on the charts?
If you take a longer term view, Tata Global is very clearly in a mature uptrend, Navneet. But thing is, the stock has moved from 115 to 295, so 294. So there's nothing wrong with the stock. I guess it's set for a further upside, but fresh buying, I'm not sure the risk reward ratio would be in favor. On the other hand, I think Tata Communication looks rather interesting. It's got a plateau at around 782. I know that's pretty far away currently, but we've been corrective since then, and we have a small headache at around 720. We're at 712. So we break above 720, we test 780, and if we take out 780, which can be a possibility sometime down the line, then we are heading towards another 10% upside from there. Shaping up well. Short-term momentum has given a breakout after it would give a breakout after almost 10 weeks of a consolidation. So looks great. Volumes happening. Looks good.
So buy above 720.
I think so. Or if you do want to buy it now, you'll have to keep a stop loss at 690 for safety's sake.
So these could be the right levels to enter.
No, just 320. I just thought we'll take in some closing strategies first, that time of the show. Rajat also has an idea, but before that, closing strategies. Jay, Thakkar, to you first. One BTST or STBT, as the case may be.
Well, I'll definitely go with the BTST only. I think Neeraj, CESC is one stock which is trading flat in today's session, but I think this consolidation of profit booking should be utilized as a buying opportunity, because this stock has reversed well from the lower end of its range that was somewhere around 975 or so, and it seems to have completed the final leg of the triangular pattern, and from here on this stock is likely to inch towards the levels of 1040. So I think 3% move can be seen tomorrow, and the lower side I would say one can place a stop loss at around say 997. So that's approximately 1% stop loss. So I think from the BTST point of view, this is one stock which is offering around 1:3 risk reward.
Hemen?
Concor, Dr. Reddy, BTST.
Concor and Dr. Reddy's, both BTST. Any specific levels?
Current levels, 1:2. So if you're going to keep a 20 rupee stop loss, 40 rupee target, 15 rupee stop loss, 30 rupee target.
Okay, that's interesting. Thanks for that, Hemen. By the way, Mahindra Financial Services is one more stock that has climbed up in the session today. I think we had an interaction with the management Friday, and he expressed confidence about how this quarter, which is the October, November, December quarter, will look a lot better than what the previous quarter has looked like. And mind you, quarter two was a good quarter too. But a 6% up on M&M Financial Services, that's a rather strong one. Rajat, any thoughts here before we get in? One more stock recommendation from your end. I think it's RS Software. But before we talk about that, any thoughts on Mahindra & Mahindra Financial Services? The management expressed a lot of confidence about the October, November, December quarter and the Jan, Feb, March quarter looking a lot better than what the September quarter was.
Yeah, sure, Neeraj. To be honest, it's the job of a management to hope for and predict a better quarter coming up ahead. But as an investor, you also have to see what's the kind of valuations at which you're getting some of these stocks. NBFC stocks in particular. Most of these stocks, barring housing finance, where I think the growth is far more than what analysts are still anticipating, but barring that one pocket of NBFC, most other, whether it's Bajaj Finance or Mahindra & Mahindra Finance and all of these companies, my concern with these stocks is that they have rallied so much that even if there's a slight correction in the market, a lot of selling will come in these pockets and in these sectors. So, I'm not for one doubting that these are great companies, you should buy and hold, but at what price? I'm not comfortable buying any of these companies and any of these stocks in my portfolio at this time.
So that's the view coming in. PC Jewellers is another stock that Darshan has been talking about, and even in last minutes of trade, this stock is holding on to the gains. Did you want to add something?
No, we had a chat with this gentleman in the morning today, right? Narnolia Securities, and he mentioned, I think, PC Jewellers, if I'm not wrong. Yeah, no, not just that much. Nothing else. You would understand the space much better.
True. That's true. And the stock is up 4% with good volumes. As of now, Hemen, if you have had a look at this chart, PC Jewellers, I think is at all-time high, at least a year high, if I'm not wrong.
Absolutely, Pradeep. All-time high. We are in an uptrend. We have been for the last 6 years and counting. We gave a upward breakout from a 9.5-week consolidation phase, range were between 320 to 395. We're comfortably placed. I'm not sure if it's a fresh buy, but definitely further upside is on the cards.
Okay, Rajat has one more stock recommendation. Let's get that out of the way as well. RS Software. Why this one, Rajat?
Yeah, so Neeraj, this is a company which I've had on my radar for a very long time, because previously some of the sort of marquee investors had also added this to their portfolio. But the problem that this company was facing up until about a year and a half back was that they had a very restrictive agreement with Visa, which is where about Visa was, it was 90% of their revenues were coming from Visa alone, and they restricted them from exploring a lot of the other opportunities. Last year they've cancelled that agreement, and this is a company which went ahead and told Visa, we don't want to work with you any longer. So to say that to a client like Visa, which has been such a big paymaster, just goes to show that the company has looked out for and identified some key growth areas. And be that as it may, even if I were to not go by what the management has done, this is a company which has again, zero debt on its books. It's got 200 crores of reserves. They clearly have the money to grow going forward, and the segments they're in, digital payments, data analytics, client acquisition, I think these are businesses of the future. So if you see last year what the company has done, they've added about 20 clients to their portfolio, and in this sector, in this industry, what happens is once you start adding clients, it's not like a one-off where you do a project for a client and he goes away. The client book sort of keeps increasing, and your trail income or your yearly income from these clients keeps getting bigger and bigger. So for the sector that this company operates in, the kind of growth that they're making, the kind of financials they have, and their track record, it's a pretty able and pretty competent, high integrity management. So at 83 rupees a share, mind you, this company has been in losses. So after they canceled their agreement with Visa last year, they reported a fairly big loss, but that was expected because, as I said, Visa was the reason. Visa was giving 90% of their gross revenue. But going forward, I think they will. Personally, over the next 5-7 years, if you wanted to buy a stock which could do very well, the so-called multi-bagger, this is something that we've identified and taken exposure to.
Okay, and we'll talk about Everest Canto Cylinder after the market wrap. I think Rajat has some coverage there. Yatin was speaking about the stock moving up. I think it's extended its gains now. But before we talk about that, it's time to wrap up the market. Let's first go across to Pradeep, who joins us with the large cap action of the day today.
Well, Dheeraj, if you look at it, decent recovery from the lows, around 80 points for Nifty Bank, 30 to 40 points for Nifty as well. And all the indices are going to close in green. Nifty and Sensex both have gained around 0.5%. So Nifty Bank has lagged a bit though. If you look at mid cap and small cap, the market breadth remains healthy even in the last hour of trade, and we'll try and bring those two indices as well. Looks like there is some issue. Okay, it's there. So again, 1/3%, which is more or less in line with the sectoral index like banking. So large cap definitely took a lead in today's trade. Individual names have done well in mid cap, but maybe not the overall index. On the positive side today, so far as Sensex contributors are concerned, TCS and Wipro. So both these IT stocks are right at the top. HDFC, SBI, so they have also done well, and ITC, Maruti were two more heavyweights that were doing well. Interestingly, HDFC Bank, Axis Bank, two prominent private sector banks didn't do much, and even Infosys, when the other two IT companies were leading the chart, Infi remained more or less the flat. Right at the bottom, you have most interesting Reliance Industries that we talked about. Also, ONGC and NTPC figured among some prominent names that didn't participate in today's rally. Navneet?
From the broader markets, you had a lot of stocks which were locked in upper circuit with gains of almost 20%. Let's just pull up the stock of that's there on your screen. That's Gandhi's Special Tubes. That was up almost 14 to 15%. Some bit of selling pressure actually came just towards the end, as you can see there on the charts, but good gains for that. Repro India was the other stock which was quite active actually since the opening session. As you can see, it was locked in upper circuit just in the first hour of trade and finally closing the day with gains of 20%. Second straight day of gains coming in for a couple of your paper stocks. So Star Paper was locked in upper circuit. This is a mid-cap paper company at around 280 is where it closed. And besides paper, the dairy stocks were buzzing, and one of them was Prabhat Dairy. In fact, there was some other news that the company was meeting multiple fund houses today. I don't know if on back of that you saw that move coming about, but clearly Prabhat Dairy was up locked in upper circuit with gains of 20%. A couple of the F&O stocks which were in focus. Wockhardt was up on account of high volumes. On the future side also, you did see fresh long build-up, so that was up close to 7%. Tata Communications saw good gains in today's session. That was up nearly 6%. Jet Airways, which was down on Friday because of bad set of earnings, got one upgrade today from Edelweiss, on back of which the stock rose almost 4%. Link Pen is the other one which was active in today's trade. That's Ruchira Paper there on your screen. That too was active, up 13%. Link Pen was also up 13%. On the losing side, you had Fortis Healthcare. That counter was weak, and remember that also featured in the list of which could enter into the F&O ban. Radico Khaitan was the other one where a bit of profit booking was seen because you did see some selling pressure, in fact closing almost at day's low.
Well, so all in all, a fabulous day of trade, more so as Pradeep said for the Nifty Bank, which rallied quite a bit from the lows. But still lagging the index in a big way. Almost half of the gains that the Nifty and the Sensex have done is what the Nifty Bank has done. But the heat map will show you. Let's first get the contributors, and save for Reliance, no noticeable loser. And again, if you look at the gainers list, yes, HDFC by virtue of its weightage gains prominence. But I think the one to focus on is ITC. After Friday's moves, yet another day of gains. Wonder how long it will last, but for now, the party seems to be okay for ITC in the session today. And now we get the heat map and show you the color of green overpowering red. It's been like this for most part of the trading day, which is actually a good sign. And if you look at the top 5 gainers, not a single financial name. So the markets are moving up without banks contributing in a big way. Yes, HDFC is there with a 2% move, and that helped for sure. But the top 5 movers did not have the banking or the NBFC names at all. In fact, now even others. So the top 6 or 7 don't have a financial name at all, which is actually a pretty good sign for the markets as well. The market breadth and the volume should come up on your screen. Just to recap how the trade was, the market breadth stayed firm, maybe converged a little bit, but still in favor of the advances. So 1:1. It's of course moved down from the healthy ratio that it was at. And if you look at the volumes, I would probably say subpar, though the NSE cash market volumes seem to be okay, but the FNO volumes certainly subpar, or maybe at par with what happens usually around these times, so much ahead of the expiry. But yeah, the volumes were fairly thin. The BSE cash, though, interestingly, higher than what I have normally seen the BSE cash volumes to look like. So all in all, not a bad day. The question mark is whether this 2.5 or rather 3-day rally that we've had, and it's quite a bit, about 2.5% if I'm not wrong, can it continue in the run up to 2 big events? Anyways, final thoughts from our experts first. Thakkar, to you first. What are the levels that you'd be eyeing, the Nifty or the Bank Nifty?
On the Nifty, it would be 10,410.20, Neeraj. The lower end of the upper end of the channel, in fact, comes to around 10,350 odd levels, but the swing high comes to around 410. The recent swing high which we had seen, before the fall till 10,033. I think once that gets taken off, it would further gain the momentum towards the target of 10,800. So I've already said that my target is 10,800. I'm expecting this range to provide a breakout on the upside, and this 400 points range will be shifted on the upside. But then it's just that once the breakout comes, you will get the further confirmation. You already have a price confirmation. That is the reversal which you have seen from 10,033 levels. All you require is a pattern breakout on the upside, as well as the momentum indicators to come into the buy mode on the weekly charts, which have gone into the sell mode. So I think going forward, eventually this will happen. I think it's just a matter of time.
Hemen, you will remain cautious?
Yeah, cautiously optimistic.
Okay.
Too many individual stocks are doing fine. The mid caps and the small caps are also doing decently well. So the market breadth is healthy. It's just that the ban list is 6. If it goes to 12 and 14, I think that's the sort of precursor for a correction. So I'd be cautiously optimistic.
And Rajat, ahead of the big events, what kind of strategy are you suggesting your clients?
I'm sorry, could you say that again?
Saying ahead of big events like election outcome. Before that, on Thursday probably we'll get the exit polls, and Wednesday morning we'll be reacting to what happens at Fed. What kind of strategy are you advising your clients really to implement at this point of time?
Yeah, no, so the stocks that we have in our portfolio and the ones we've recommended, personally, either of these 2 events should not have any bearing on our portfolio. So we've not asked any client to do anything based on what could be the potential outcome of either the elections or what happens in the Fed meet. I think irrespective of what the results are, I mean, I've heard a lot of talk around, if BJP does not do well in Gujarat elections, markets could suffer. If Fed does this, that could happen. Personally, my portfolio is not really based on that. I'm looking for stocks which I think will grow a lot, which will do well. 1 or 2 day, I mean, typically these events have an impact for 1 day, 2 days, maybe a week, but that's that. I don't think this could disrupt the market in a big way. For markets to be disrupted in a big way, I think something much bigger than this has to happen, which I believe will happen at some time, but I don't think either of these 2 events will, start something like that.
Why do you like Everest Canto then, Rajat?
Yeah, no, so Neeraj, this is a stock that we recommended some time back. It's run up a lot since then. This company is a pioneer in high pressure gas cylinders and are expanding a lot their capacity in terms of CNG cylinders, and I think that's again an industry which is likely to grow a lot given the government's focus on reducing pollution in our cities and on clean fuels and stuff. What caught our attention was that the company has been reducing their debt consistently, and last year they've sold off a lot of their non-strategic assets, which is particularly their land and some buildings in certain locations, and that's brought down their debt levels right now. So this is a company, which is the only company in this sector in the high pressure cylinders and the CNG cylinders at that scale, at least in the listed space. So that's what we liked about the company. We recommended it. It's something that we're monitoring, or we're going to monitor going forward quarter on quarter how the results are coming out, and keep in mind that anyone who's buying into this should based on how the company performs going forward, be very careful on when to exit the stock.
Okay, gentlemen, all of you, thank you so much for taking the time out and joining us on Countdown right here on Bloomberg. Quint, so Rajat, Hemen and Jay, thanks for being with us today. Take a break, come back with the complete lowdown of what's happened in trade today and some voices from across the world as well.
Are we live? Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Business news, we're news for business people.
Welcome back. You're still watching Countdown with us. A positive start to the new week for the Indian markets, but let's also do a check for the European markets, which have been trading positive in today's trading session. While you've got the CAC, DAX and FTSE, all the three major benchmark indices have been trading with a positive bias. Let's go across to Sandra Kiloff, who joins us from London studio with the complete details of the equity action there. Hi, Sandra.
Well, we're seeing the Stock 600 index little changed at the moment, pairing earlier advances because of losses for telecom and technology shares, very much offsetting some gains we saw earlier in miners and bankers. The Stock 600, DAX, CAC 40 all trading relatively flat at the moment, while the UK's FTSE 100 has gained 0.6%, trading around its highest level in almost 2 weeks. Vivendi is the top gainer on the Stock 600 today, the stock to watch, so to speak, rallying 3.5% after media sector Mediaset chief executive said he hoped the shared interest over TV content with Telecom Italia could pave the way to a truce with Vivendi. CEO Pier Silvio Berlusconi commented to Italian daily Corriere della Sera, and it comes after Mediaset and Vivendi have engaged in a legal battle since the French group last year unexpectedly backed out of a deal handing it control of the Milan group's pay TV unit Premium. Now, sources close to the matter have said that the two sides are in talks over a possible deal, with Vivendi hoping to reach an agreement before a December 19th court hearing in Milan on the case, and that's sending the shares up today in trading. Now, in currencies, the euro has climbed 0.2% to 1.1791 against the dollar, while sterling has dropped 0.1% to 1.3378 against the greenback. That's the weakest level in almost 2 weeks. If we take a quick look at fixed income, we're seeing Germany's 10-year yield falling 1 basis point to 0.3%, while 10-year gilt yields have decreased 3 basis points to 1.25%. Back to you.
Okay, thanks a lot for that. Okay, we have some news. Rahul Gandhi has been appointed as the Congress party president. Not that it's any surprise, but this is according to news agency ANI. The Gandhi family scion takes over from his mother on the 16th of this month, just 2 days before the Gujarat and the Himachal Pradesh poll results are announced. The 47-year-old has been leading the party's campaign in the 2 states as well. These are, of course, visuals, but we will probably cut to the Congress party press conference as and when it is available. But yeah, this is now official, not that it causes any kind of a surprise, Pradeep.
Definitely. So this would be interesting, you know, what happens on Monday and how would the new president react to it, what all will he get the credit and or not get the credit for. Although, you know, one thing is for sure, whatever happened over last week or 15 days, he definitely got a credit for bringing the Congress back in reckoning in Gujarat. I don't know how much of that is his own doing and how much of that, you know, has happened because of the way BJP cadre has moved up, has worked, or the policies that the central or state government has followed. But Gujarat, in either case, may turn out to be the first success of Rahul Gandhi. You know, if he gets significant number of seats, for which there is a high probability, but we don't know which way it finally goes. There could be surprises.
Yeah, true. These are live visuals, really, of just outside, I believe, the Congress headquarters, where this announcement has come in. And obviously you will have such visuals with Rahul Gandhi supporters out there chanting slogans in his name as he's been appointed as the Congress
president. That would also, but yeah, that would also mean that Sonia Gandhi has practically retired from politics, you know, for all practical purposes at 71.
Yeah, but you never retire until you almost retire. So let's wait and watch what happens, quite frankly. Anyways, more on this in a bit. I think Monday would be, as Pradeep said, key litmus test as well. Let's see. If I must say, though, that if indeed Congress tastes some success, whether it's in form of a surprise victory or a very narrow margin of defeat, if at all it's either of those 2 scenarios, then it would be a feather in the cap of Rahul Gandhi. And as again, whether or not he's the pivot around which this has happened or no, but it'll be a feather in the cap for him as well. So let's wait and watch. These results would be very important for both the parties accordingly. Let's wait and watch. Anyways, more on this in a bit. For now, sorry, you want to make a point? No, okay. For now, let's move on to commodities, and there is something happening between gold and silver, Pradeep.
So I think so far as the gold is concerned, it has remained weak, and it now takes about 80 ounces of silver to buy the gold. So this is the gold and silver ratio, which is really interesting. And in fact, data is available for a very long period of time for which you can analyze the gold and silver ratio. Of course, in previous century, it was controlled. So you have 200 years of data to analyze. Jayesh Khilnani is standing by. Jayesh, for how many years or decades have you really analyzed the data for?
So Pradeep, I've looked at over 2 decades of data, and that is on a monthly basis as far as the gold versus silver ratio is concerned. So the current ratio stands at about 79 that you can see on the screen, and this is the ratio chart, how it has actually moved you know, since 1998 till 2007. Now what is really interesting is that current level is very close to the 80 mark, and historically if you see that this has been you know, a very good resistance point for the ratio, and after that it has actually slided down. And now let's have a look at, few cases in history. So if I refer to the 2003, ratio, that was about 80.45, and from there it has declined substantially to below 60 levels, and then again you see 2009, where it was once again close to the 80 mark, and it has in fact declined to less than 35 on the ratio itself. So currently also we are staring at those particular levels, and from here on we can expect that some move will come in for gold and silver prices. Now how do these, or these time periods what I was referring to, how has gold and silver performed? Let's have a look at that, and that will give you the interesting picture. So look at 2003 to 4. Of course, this is a bigger time horizon chart, so this looks to be flat, but what actually happened was that during this period, that is from May 2003 to about 2006, gold has given you as much as 78% return, and silver during the same time has given you more than 200%. So it shows that silver has outperformed. What this essentially means is that the ratio has to come down, which means that silver has to gain strength and gold has to weaken. So whichever direction it happens, that is the scenario that is likely to play out. November 2008-2009 that we saw, the ratio declined from 79 odd levels, and post that what happened was that gold has given you 90% return, but silver on the other hand has given you nearly 400% return from the high level of the ratio that we saw from 80 to about 35 odd levels, and currently also we are standing at about 79 for the ratio. Going ahead, what will be interesting is whichever direction these commodities move, it is most likely that silver will outperform gold prices.
So the key takeaway is that if you are really bullish on precious metal at this point of time, the metal to buy is silver and not gold.
Yes, Pradeep, that's exactly correct.
But both the metal may move in one direction. Both of them may correct.
That is likely to, in that scenario, what will happen is gold will fall more than silver. Because see, mathematically what happens is that the ratio has to come down. So the numerator and the denominator, that have to act accordingly then.
Or you can go long gold and short silver. So these are all the possibilities, the way you can play.
You can go long Bitcoin and short gold. That's what I've been reading in the last few sessions, that gold prices have not been
You can go long Bitcoin and short any asset under the sun, and you'll make money. That is what most people believe, at least today, but we don't know what they'll believe tomorrow.
What's the price today? I haven't checked it. Any idea?
So the futures have gone to 18,500. That was the last I had seen quoting at a huge premium to the other price. I don't know what you call it. It's a cash price or whichever
price.
And I don't know, one of
mining price.
One of the traders, I don't know who, called the Bitcoin rally earlier during the year. He's suggesting it could also cross the $100,000 mark
in 2018. That's interesting. Well, we did have the Saxo Bank currency analyst say that he believed fundamentally Bitcoin is slated to go to $80,000.
Since we were talking about gold and silver, there's one point I would like to make. At one point, maybe 100 years back, the ratio was fixed at around 15 or 16. And you look at it now, it's around 80, which means after both the metals were freed from the government control over last 100 years, in fact, gold has been gaining over silver. So in the very, very long term, gold is more popular than silver. That's the trend. It is a short-term strategy that we are really suggesting.
Yeah, despite all this talk of how silver has industrial use and can do this and can do that, somehow gold finds more favor than silver for sure. But as Navneet said, Bitcoin finds more favor off late than gold and silver and something else put together as well.
Okay, that's
and
about...
a committee has been set up, I think, or is being set up in India also.
For?
There's one flash I have read today to discuss, to understand Bitcoin and then suggest what kind of policies should we formulate. So whether Bitcoin remains legal or at least remains not illegal as it is today. It's not legal.
Yeah,
it's
because
not backed by any agency.
Now it's being traded on a regulated exchange, which means it becomes safer for anybody to trade. CBOE is a recognized exchange in the world. So I'm sure this move, and I think even NASDAQ or CME will be, NASDAQ is still contemplating, but CME will be listing the futures in a week's time or something. So when you have these regulated and recognized exchanges now introducing, Bitcoin futures, I'm sure majority of the countries will have to sit down and take notice of it and at least come out with some policies whether it should be regulated or not. Okay, that's about the commodities world, but let's move on. Come Wednesday, bankers will have to submit a resolution plan for the 29 companies identified on RBI's list of stressed accounts, and chances are most of them will have to be admitted for insolvency. 3 bankers Bloomberg Quinn spoke to say that this list includes the 3 large accounts that make up for almost 40% of the total 1.82 lakh crore that's on the line. Vishwanath Nair, who's been speaking to all the bankers, joins in with more details. Vishwanath, how big is the total exposure to these accounts?
Exposures worth 1.82 lakh crore at a risk of going into the insolvency and bankruptcy process as early as the end of this month. That is what our banking sources are telling us. Now, if you remember, in August, the Reserve Bank of India had sent a list of about 29 corporate accounts to bankers for resolution outside the insolvency and bankruptcy process by the 13th of December. If the bankers had failed in securing any kind of resolution process for these accounts, they would go into the NCLT for an insolvency proceeding. Now, what bankers are telling us is that out of 29 accounts, the banking sector has an exposure of about 1.82 lakh crore, and nearly 40%, that's about 70,000 crore worth of exposure is concentrated in only 3 accounts. That's IVRCL Limited, Videocon Industries, and Jaiprakash Associates. What bankers are also telling us is that they had identified about 11 out of these 29 accounts which could be resolved outside the NCLT process. However, of these 11, only 4 or 5 are anywhere close to a real resolution plan. Now, bankers have been holding a very high provisioning in all of these accounts for a very long time because they have been NPAs for a while, so they have been providing for these accounts over the last few financial years. So therefore, if these accounts do end up going into the insolvency and bankruptcy process, the provisioning hit that was expected on the bankers' books, that will not be as high as what some people would have worried.
Vishwanath, let's shift focus to the 3 large accounts you mentioned. Are any of the 3 on that list of 11 accounts which may be resolved outside the NCLT?
Of the 3 accounts that we mentioned about IVRCL, Videocon Industries, and Jaiprakash Associates, only JP Associates is the single company where bankers are trying to somehow resolve the case outside the insolvency and bankruptcy process. They are working with the promoters. That is what bankers are telling us, that they are working with the promoters to find some kind of a resolution plan, some deep restructuring that can help the company turn around. The domestic bankers' exposure in this case is over 29,000 crore. That is what the banking sources are telling us. In case of Videocon Industries and IVRCL, bankers are more or less certain that these accounts are going into the insolvency and bankruptcy process. Videocon Industries also has a subsidiary, Videocon Telecommunications, which is part of these 29 accounts that the Reserve Bank had pointed out. In case of Videocon, however, lenders are open to some form of one-time settlement with the promoters, and if the promoters are able to bring in some money before the 13th of December, then this can be settled. However, it is likely, bankers are telling us, that both these accounts will end up in the NCLT process.
Okay, thanks for that, Vishwanath. Now, Congress party has officially put out a tweet on the election of Rahul Gandhi as party president. That's on the screen. The All India Congress Committee Central Election Authority officially announces Rahul Gandhi as the president of the Indian National Congress. This is not a surprise by any stretch of imagination, but it's now officially out from the Congress party handle.
Okay, so that's the political development. Moving on to the base effect-led stellar 50% growth for commercial vehicles in November may fizzle out in January unless supported by a pickup in infrastructure spending, says Vishnu Mathur, Director General of SIAM, in a conversation with Bloomberg Quinn's Krishnu Mukherjee. He says it's actually the passenger car segment that is on track to meet or in fact beat the growth target of 7 to 9% in this financial year.
We have seen overall in all categories the growth in November, the month of November, to be over 24%, with the growth coming in almost every segment of the industry, including passenger vehicles, commercial vehicles, three-wheelers as well as two-wheelers. Now, to your specific question, yes, there is a reason, because November 16, which is the benchmark or the comparative month for November 17th, where all the data is collected, was a month that was hit by demonetization. And because of that, the sales of vehicles in all categories had slumped very, very quickly in the month of November. So November is a low month, is a low base month for us. And what the growth that you're seeing here, the high double-digit growth that you've seen, is largely because it's compared to a previous November, which has a low base.
Right.
So as we go along in the month of January, by January, one should see that the normalization takes place in the four-wheeler segment, but the normalization will take a little bit more longer in the case of commercial vehicles and two-wheelers, where the impact of demonetization was a little bit more extended.
Right, sir. So demonetization, you said, was the reason that the low base was created and hence the growth this time. Can we expect the same trend to go through into the last month of the year also, into December?
See, December again, by the end of December, the four-wheeler market had started recovering. Right. And by January, it had fully recovered. So as I said, in the passenger car, the passenger vehicles segment, you will see normalization of the comparison happening. But in the two-wheeler segment and in the commercial vehicle segment, the impact of demonetization was a little bit more extended.
Right.
So we will see the normalization happening after some time, after maybe 3 or 4 months.
Right, so we're already into November. We've been asking you through the year if you would want to change your forecast, the forecast that you issued at the beginning of the year. Would you still stick to the same numbers that you said, maybe a 7 to 9% growth for the passenger car segment, or do you want to change it now?
As of now, we are sticking to that. But I think after December, we'll possibly take a review whether the numbers need to be re-looked at or not in terms of the projections. But our numbers was 6 to 8%, and we are today in the passenger vehicle industry actually clocking higher than that.
So, so there is a fair chance. While you're saying that you'll revise your forecast next month, there is a chance. There's a fair chance that we will supersede the expectations that you had set.
Those numbers will depend more on the April-December data rather than just the December data. So one has to see the entire fiscal year, how that's been performing, for us to be able to take a call on changing the projections.
Right, sir. One question about the commercial vehicle industry in particular. There's been a 50% growth this month. Would you say this is also because of demonetization, because fleet operators were also hit during demonetization last year? And also, growth in the passenger carrier business in the MNHCV segment still doesn't seem to come back. How much longer till before we can see green shoots over there?
So, two reasons. Firstly, demonetization did have an impact on the commercial vehicle industry, including the truck industry. So, part of what you're seeing today, the high growth, is because of that.
Right.
But also it is a fact that there has been increase in spendings in infrastructure development, which gives rise to demand for commercial vehicles. Commercial vehicles have also gone through a lean period, so there has been some vacuum in the system, so that is getting filled up. Yes, and as we go along, if the infrastructure focus continues and the spendings continue, we should see a continued growth in the goods carrier business particularly. As far as the passenger carriers are concerned, we still have to see a big movement in development of public transport. And that is something that we would like to see, because we all know that there is a dearth of public transport in India, not just in Delhi, but in other cities also. And it is supposed to be one reason why public transport or public vehicles get encouraged, because there is lack of public transport, which then leads to all kinds of issues like congestion and environmental issues and sustainable. So we have to provide sustainable mobility to the masses of India. And that cannot happen unless the public transport gets beefed up in all the major cities. And there is an integrated transport management solution with a focus on improving public transport. So we would like to see that happening. And that is one of the reasons why you see the bus segment not showing so much of growth. And that is something that should be a priority for the country as a whole.
Okay, with that, it's a wrap on this edition of Countdown. Goodbye from Neeraj, Pradeep and my side. Thank you very much for watching the show. Don't go anywhere. Coming up next is What Did You Miss?
reporting that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Good evening, I'm Shraddha Babla and you're watching What Did You Miss on Bloomberg Quint Live. Let's go straight to the headlines. Rahul Gandhi has been elected as the president of Congress Party unopposed and will officially take over on the 16th of December. Indian equity benchmarks rose for the third day in a row, led by gains in ITC, HDFC, TCS and State Bank of India. The Indian government has moved the Supreme Court seeking to halt the Vodafone tax arbitration. And the Supreme Court has agreed to hear Unitech's appeal of challenging the recent order of the National Company Law Tribunal directing the central government to take over the management. Banks may send